Hey guys, gals, and traderettes. Hi, this is Greg McLeod from the Elite Traders University, and it's so great to be with you here on this Sunday. And we're going to be looking at the week ahead, and in particular, we're going to be looking at a particular announcement. We're going to be looking at the how to trade the Reserve Bank of Australia meeting minutes. That's called the shortened the Reserve Bank of Australia (RBA). For short. Again, my name is Greg McLeod, and this is going to be a really short presentation on how to trade this announcement that's coming up on the 18th. On the 18th, we're going to be looking at the economic calendar and taking a look at that. But for those of you like, well, what are the minutes and what's the RBA? Okay, let's go ahead and before we get started, I want to direct your attention to the risk disclosure on your screen. Make sure you understand all the risks associated with foreign exchange trading. Okay, again, my name is Greg McLeod, and I am the instructor and founder of the Elite Traders University. I'm a 24-year trading veteran, and I've traded everything from crypto and stocks and Forex, and I'm one of the foremost authorities of short-term scalping and day trading. And so I will give you the opportunity to join my free Facebook group, and maybe get access to our we're having a special sale on our Forex heat map that's behind me right now. Okay, so the week ahead, though, we're going to look at the Australian dollar. It's going to be big in the news. It's the minutes. And I'm just going to give you a little brief overview about why this is important and why we want to take a look at trading the Australian dollar. Okay, so the Australian dollar is a commodity currency, and that means that the basis of their economy is based on exports of raw materials like gold and coal and iron ore. Okay. It's a commodity currency. They're short for commodity currency is COMDOLs. Okay, COMDOLs. And those are like New Zealand dollar, which is the breadbasket of Asia. They have more sheep than people, and they supply food to Asia. They're called breadbasket of Asia. You have the Canadian dollar, which supplies lumber and oil as well, one of the largest suppliers of oil in the world. And that's why their dollar is getting smashed right now. Right, so you have those commodity-based currencies. Okay, so their fortunes rely on being able to export commodities to people. But in fact, you can see this diagram here where we have iron ore 38.8 billion, gold 13 billion at exports. These are top exports in Australia. Copper 3.2 billion, and copper is like the indicator of global growth. Use copper in everything from pipes and wires and air conditioning units. And so copper is, they call it Dr. Copper. In fact, when you have copper prices going up, well, guess what? The Australian dollar is going up. It means the economy is going great. If nobody's building anything and no one's buying air conditioners and there's no one buying electronics because of an economy that's going down, well, that's bad for the Australian dollar. And it's bad for, copper prices as well. Okay. Now, the Reserve Bank of Australia is like our FOMC in the United States, or the central bank, the ECB in Europe, the Australian central bank called the Reserve Bank of Australia. And it used to be a joke, we used to call it the Royal Bank of Australia, but, it's the Reserve Bank of Australia. It's RBA. That's the, and what we want to look at is the minutes. Now, the minutes, they're important because they tell investors and economists how the RBA came to their interest rate decision at the last meeting. Okay, they cut the last meeting because of the COVID virus, because they feared that the economy was going to go down. So they had to pump liquidity into the market, and that thus weakened their currency and make sure there's enough money available to stimulate the economy. Okay, now, as we've seen, they have been able to reopen their economy and things have happened. We see the Australian dollar has actually been doing pretty good. And also the stock market, even though it's dropped a bit, it has come back too. And there's a really close correlation between the Australian dollar and the Dow and the S&P. Okay. So the minutes also tell us whether or not future cuts are planned for the next meeting. Okay. So the market is a discounting mechanism. So just because they cut rates now doesn't mean they're going to cut in the future. In fact, the way the Australian dollar has been moving up, they might not even cut, and so we might even see a higher move in the currency. But we're going to look at our forecast later. We're going to look at some charts. But the minutes reveal the factors, the main areas that the RBA, these group of guys, are actually thinking about, guys and ladies. There's a lady back there that actually decide what's going on with the Australian dollar. Okay, so now what's going on is we've got the COVID all over the world, and every central bank is looking at how they can help support their economy. Some economies are starting to try to open up, and there's a fight between public safety, staying at home, or proceeding carefully, or extreme caution. And so this meter, it's kind of like, we don't know where they are, but they actually have a 3-step plan for reopening. And if they're successful at reopening, then that's really good news for the rest of the world. And we get back to normal and stop being in quarantine, right? Stop wearing our mask. Okay. So they're going to be looking at that. In fact, here is Scott Morrison, who gives he's going to he has a plan. The Prime Minister has a plan for reopening the economy, and that may be very bullish for the Australian dollar. But let's go to the charts, okay? So we're going to go to our charts, okay? And we can go, actually before we go to the charts, we can go to my Forex heat map. This is my Forex heat map. This is an arrangement of currency pairs by percentage change. It tells you what's hopping, what's popping, what's dropping, and what's not in the market. Now, this has been my top secret tool for finding opportunities in the Forex market. I've used some type of heat map for the past 15 years. In fact, I tried to get the brokerage to code something like this, and they said, nah, it's kind of too good to actually have it for the retail people. But I decided to have it coded and make it available as well. Normally, it's $199 for the year. I'm giving it away special because you're tuned in, lifetime subscription for $49.99 or $49.97. $49.97. Hey, you saved 2 cents. So go ahead and go to mymarketheatmap.com. Click the Buy Now button and go ahead and get this powerful tool. It's 5 different heat maps. We have not just the all currency heat map. There is a equity index heat map, so you can see what's going on with the global stock markets. Right now, they're all pretty much closed, right? And they're gray because there's no percentage move. We can look at a commodities heat map, so we can see, and the commodities futures markets are closed. Okay, so this is Sunday. I'm recording, so that's probably like, well, Greg, this thing's not working. It's like the markets are closed, guy. Okay, and now the crypto heat map as well. And there's the crypto majors, and you can see that Ether is up 8.36%. Whoa, look at that. That's a big move. Okay, and then we can look at a Forex majors heat map, which allows us to look at just the majors. There are 7 major currency pairs. We can see the Australian dollar is up 0.05%, not a whole lot. But it's up in early goings on with the Wellington, New Zealand market that's open currently, right? And then we can look at the Forex heat maps, which has all the currency pairs, or the majors, and the crosses as well. And we see the Euro Pound, Aussie Kiwi, and a number of pairs are up various amounts. It's really thin trading right now, and these tiles move dynamically as the market moves. We'll see that green means that those currencies are in an uptrend. Red means that they're going in a downtrend, and gray means they're not really moving that much. They're moving in a range, and prices are calculated from 5 p.m. Eastern time, which is the start of the New York. We start with the banking centers in New York. 5 p.m. or Wellington, New Zealand, we're starting, so it goes from Sunday to Friday. And so basically this tells me that, now right now 0.7% is not a whole lot, but if we get like 0.28, 0.36%, I'm going to start looking at these things that are uptrending. Similarly, I'm going to look for red downtrending negative, 3.6% or so or more, and if it's down like 1%, this thing is like on fire, right? So this is how I can, instead of looking at multiple charts, I can look at this and get a whole view of the market. Okay, anyway, enough of that. So we can see that right now, when the markets warm up a bit, these will be fully active. But there's also tools in here too. Go to the Trader's Toolbox. There are charts and quotes in the economic calendar. We can take a look at the economic calendar, right? And it's loading. I should have had it preloaded, but there you go. Okay, so there's our economic calendar, and we can see that and that's what we're going to be looking at is the RBA meeting minutes, and it's going to happen at about 8:30 Eastern time on May 18th, which is tomorrow, and the impact is high. And I like looking at the high impact, the high impact announcements. That's where it gets the biggest bang for the buck. Now, another big one that's coming up, and I'm going to do another video on that, is the ECB rate decision, and that's going to be coming up too, right? ECB rate decision. They're expected to keep rates unchanged. Or actually, they look like they might cut and make them negative, and that would really send the euro down lower. Okay, but we're going to talk about that in the next video. Okay, so let's go ahead and take a quick look, and then we'll go ahead and sign off. Here is a 4-hour chart of the Australian dollar, and we can see we had higher swing highs, higher swing lows. We can back it up a bit and go out to a daily chart, and we can with more bars of data. And we actually I like looking at it weekly, getting that 50,000 foot view, guys, and we can see that from a 50,000 foot view, we have been sliding down from some old highs back when we were above parity, one spot 1125, way back when, 2011, 9 years ago. So we're just going lower and lower, lower swing lows and lower swing highs. This is a clear and very obvious downtrend, right? But there are periods where the counter trend moves lasted for years before we actually had a resumption of the major trend. Okay, and in fact, I'm going to be talking in my class tomorrow on trend trading versus scalping. And I had one of my students say, "Hey, Greg, you taught us how to scalp. Why don't you teach us how to trend trade?" And I'm going, "Well, you got to understand that, and I won't get my fire away, but trends are only the market only trends about 20% of the time." 80% of the time is in ranges, and that's where counter trend scalping, like I teach in my Paper Run Forex Scalping Bootcamp, and the Forex Cash Machine, come in really handy, right? So that's what we like to do. We like to be able to scalp, get in and out really fast, multiple times, and then whoever wants to chop around, who cares, right? Okay, so here's where we are currently trading at 0.6416. We have sharp drop. That sharp drop was the result of the COVID-19 virus shock that has just erased trillions of dollars of value. And you say, well, Greg, this is the Australian dollar. How does that tie with the U.S. stock market? Well, Australian dollar is very closely, aligned to risk assets, and to stocks. Okay, so that's what we're looking at. If you take a look at the S&P, if I go here and go to the S&P chart, and you look at the two charts together, you'll see that here, look, a sharp drop and a sharp rise, a double top. We're at this area here, and a lot of people are looking at a retest of a low. I'm one of those in the camp that are looking at a retest of this low. Look at this chart, this V. But a lot of people are thinking maybe we get a V bottom and then we go straight up, right? And that is possible too. A lot of things are a lot of possibilities. But you can see our chart here. This is our Australian dollar, big drop down, just like the equity chart, just like the S&P chart, or the FTSE 100, which is the UK stock market, or the ASX 200. They all have the same pattern, the same sharp drop, and the same recovery as trillions of dollars. And another $3 trillion is coming out of the U.S. Congress as a bailout to help people ride out this coronavirus. Okay, but will it run out? And what will those RBA minutes tell us? Right. Well, if the RBA decides to come out with what we call hawkish, and hawkish meaning they're probably not going to raise rates. Okay, probably not going to raise rates anytime soon. But if they believe that there's a recovery and they don't want their currency to go up anymore, they may stand pat and not do anything, or they may have another cut. And, they might even go negative. In fact, you can even go to the great thing about the MyForex heat map. It's like a Swiss Army knife. There's all kinds of tools. It's not just a heat map. Okay, you can go to the economic calendar, financial news stream, market hours, but you could also look at the rate, the central bank rate, and we can see what the central bank rate is for the various countries, right? And we can actually scroll down and scroll down and scroll down, and yeah. And there's Australia. Australia's at 0.25%. Let's say they cut. Okay, 0.25, and a lot of countries are 0. And so there's still a high yielder because the U.S. is we're at 0. Okay, so they may cut, and if they do cut, that is bearish for the currency, and usually that'll send the currency lower. Okay, 0.25 currently. If they cut 25 basis points, 0.25 is 25 basis points. If they cut 25 basis points, that takes their rate down to 0. Okay, 0. Okay, so would you want to keep your money in a 0 rate bank? It's like, no, right? But what are your choices? Well, you could probably go over to Mexico. They still give 6.5%. Not bad, right? 6.5 in a low risk environment, or a very low rate environment. No, high risk, low rate environment. Okay, so if they, and this is what I'm looking at, we have a triangle going down technicals. Now we've got the big fundamental picture, and I love the fundamental picture. I get some people, well, I don't look fundamentals, they call them fundamentals. It's like, that's like the backdrop. Just like I got this backdrop here of the heat map, that's the backdrop. But the guy in the seat is what's going to tell you what's going on, right? And so similarly, that's how it is when I look at charts and look at technicals and look at fundamentals. I look at the backdrop of what's going on, and if it's if it's stormy and rainy for a backdrop, like in a Broadway play, which probably means sadness or death or something like that. If it's bright and sunny background with a sun painted on the wall or something like that, like we did in high school plays, well, it's probably going to be a romance or happy or something like that, right? Reunification or something, So the scene creates the mood, and the mood creates the market. Either it's a bearish tone based on the fundamentals in the background, or a bullish tone, a happy, a moving, a jovial, yeah, things are getting better kind of tone. And so the backdrop is kind of promising because they are, Australia is, they seem like they flattened the curve. Seems like they're doing well as far as managing new cases. They're slowing down the rise of new cases, right? So now we've got maybe an optimistic background, but let's say they make an insurance cut. They go, yeah, things look good, not that good. Let's cut it one more time. So let's say they cut. Okay, worst case scenario, or any case scenario, it's not really good or bad for us because we can buy or sell, and that's why I like Forex, because we can buy and sell without any type of uptick rule or any restrictions, as opposed to a lot of other different asset classes. In fact, some of the indices, they're going to cut out dividends, and they're also they're in this kind of a market, short sellers are getting crushed because being short and being bearish on the market means that it's going to hurt the economy. So there's rules against a lot of short selling as well. So you don't have those restrictions in currencies. Okay, so here we go. We're at 64.15, and a couple of things I'm looking at, and all these lines I'm going to explain them really quickly. But we had some sort of a head and shoulders pattern here. And I'm going to show you that head and shoulder. Head and shoulders is a bearish price pattern. And we had something where we had a shoulder, a left shoulder, a head, big tall move head, and then maybe a right shoulder. Right? So we have this head and shoulder pattern. And the way we trade head and shoulders is that we take the height of the head to what we call the neckline. This is our neckline. And when price breaks that neckline, the height in measurement, we take that height from the neckline to the head and project it from the breakout point, and we get a potential target. Okay, the potential target that we're looking at is 62.43. That's 0.6243, and that's if we are, in the case we get a south side break on the news that's coming out. Okay, and there is support right here. There's lots of support back here. There's a April 21st low around the 0.6249 area, and that comes in with also a April 16th, 2020 low as well. And it's also a Fibonacci expansion target right here at 0.6219. And so we've got a confluence of support right here. And we have some bullish fibs. So this is our 23% retracement. There's a 38% retracement here at 0.6180. Okay, and I'll show you that. So I'm looking here as a possible target. See, there's our 38% retracement there, 60 about 0.6175. Okay. Because on the weekly chart, we kind of like to have an inside day pattern where we have a bullish candle and a bearish candle right next to it. So it's kind of like, oh, right. And then we're getting some lower swing highs and lower swing lows. Kind of a double top here at the 0.6558 area. And we're making these lower highs and lower lows. So I would look for a break for a move down to this area. However, the alternative scenario, because you have to have an alternative scenario when you're fireman, you gotta know your exits before you get in. My cousin, he was a fire captain, and he says, well, we use a fire, follow the hose. If you're in the smoke, just look down at the hose and follow the hose back out. But you have to know your exits before you enter. So if it follows through, then this is our move. However, the invalidation of our head and shoulders pattern. And there's a shoulder right here, kind of 2 shoulders here, another shoulder, like 3 shoulders. It's like Quasimodo. It's kind of like, okay. Anyway, so I would look at a break of the high, the double top here at 64.73. There's a little double top right there. And if price turned around and got back above that, I would get long. Okay, so that's my alternative scenario. If then, okay. And a lot of traders can't think in terms of if and then. They think, oh, it has to be this way because he said it this way. It's like, look, if a big order comes in, a big, $10 billion order comes in, and the bank of the RBA gets behind it, well, guess what? This thing is going to blow out through here, and it really doesn't matter what I say, right? So we have to be willing to take the stop and flip and get long, right? And then we would see probably a break. If we were to break, then we would see this Fibonacci here is 67.20 coming into play, right? So if we were stopped out here and we're able to get above this triangle pattern, which is formed, this consolidation, because it's indecision. A triangle means indecision. It's equilibrium. Bulls and bears don't know. Like, I don't know. Do you know? Oh, I don't know. You don't know? I don't know. So they stay the same. But once they break, then that's going to create this continuation move, okay? So basically a break maybe above 0.6500 or a break below this, okay? And that's the trade. That's how I would trade it with the Aussie dollar, the RBA decision coming up. If you have any further questions, you can always, join my group, join my free Facebook group. In fact, you can find it right here. And, you can join that. Facebook groups, just type Forex Cash Machine, Forex, the number 4, the letter X, and Cash Machine. And then you can join. And I pop all kinds of information, trade tips, all kinds of funny things, humorous things. And you can learn some things too when you join. Okay, and it's absolutely free. Just go ahead and join. And also, if you join my free masterclass that's going by 4pillarsto6figures.com, if you want to learn how I actually trade and how I can help you reach your goals. Okay, so this is Greg McLeod signing out for the Forex Cash Machine and my market heat map and Elite Traders University. Look forward to seeing you in our trading room, and I wish you happy pipping. Cheers. Bye-bye.
If you want to learn more about profiting from the Forex market, go to www.theforexcashmachine.com and sign up for a free training webinar. Get the secrets from Greg as he reveals how to earn limitless income. Learn more to earn more.